Welcome back to Income Trading 101. Today is February the 23rd, 2021, and we are going to take a look at AMC Entertainment Holdings, symbol A as in Alpha, M as in Mike, C as in Charlie. This has obviously been one that's been in the news. There's some rumors about a possible takeover even, and I've been avoiding recording. I really didn't want to dive too deeply into some of these companies that have been targeted possibly by the subreddit groups, but this one is interesting from a technical perspective. So we're going to do what we always do here. We're going to go ahead and just take a larger look at where this stock is, where it's come from, and looks like I can only pull data all the way back from 2014. And you can see by some of these blue points down here, at one point, this was a dividend paying stock. And after a series of poor earnings updates, they dropped their dividend. Looks like they just dropped it after the pandemic last March. So I'm going to go ahead and remove volume. Now, I'm not expecting a whole lot of valid data, if you will, from the moving averages. And let me explain to you why. This period here, what happened to the stock in February, is outside of sort of the technical analysis realm. You had such high reaches. I mean, look at this. The stock went from $2, right? $2 on January the 4th, all the way to a close of almost 20 bucks. It had a high of $20.36, had a close of $19.90 on January the 27th. And now we're back, it dropped to $6, and now we're sitting here at $7.70. This stock has been all around the world and back, but if you were to eliminate this 2-week period, that moving average would be a lot more valid. But with that in and with it having been so close, it's going to be difficult. But just for consistency, we're going to start. And, while it might be a little less valid, if you will, from a day-to-day standpoint with using the day charts, we will drop the time period. As we lower the time period, that moving average is going to actually be more valuable to us. So again, we might see it be a little skewed initially when we're looking at the daily data, highly affected by what went down when the stock was driven higher, and you can see that here. This 10-day, this sharp cliff falling off. The 20-day still high. So the 20-day still is going to include some of these markings. Remember, the 20-day, this is not 20 standard days. You might be thinking to yourself, well, it's February 23rd. That period is already out of the stock. Well, it's really not, because we're talking 20 trading days. So 4 weeks ago, which would have been right around a little bit before here. So that's why that 20, let me zoom in on this. That's why the 20 is so much higher than the 10. And of course, the 60, this is what I love about the 60 days. Even though you have these high days included, these, 4 or 5 days of high, of when the stock was pushed higher, 60 days, it takes a lot to alter that 60-day horizon, right? 5 days is 1/12 of that 60-day horizon. So not going to affect it too quickly. And that's the beauty of having also employing like a longer term moving average in your analysis, just because it helps to avoid any it just mutes any the impact of 1 or 2 days. All right, let's drop the time frame. We're going to drop it down to 4 hours initially and just get a sense of where we are. So on a 4-hour chart, we've got a lot of congestion happening here, but the 10-day is actually pulling higher than the 20, and both of them are lower at this level than the 60 period. Let's drop it down to 1 hour, see what we see. All right, so at the 1 hour level, check this out. We actually have all three moving averages in line. That's great. I like that because the 1 hour data is not going to include the period where the subreddit groups were looking to push the stock a lot higher, kind of like what happened to GameStop. So, if you can use a shorter time horizon, the moving averages are actually more valuable. I don't think we need to take it much lower than that, but here's a 15-minute. You see a crossover having happened, a couple days ago, or actually in the last week on Friday, and then a little bit of a jump came down to kind of fill in that gap, and it's just been a steady climb higher on Monday and Tuesday this week. Today is Tuesday, so looking at this in a shorter time horizon, it's actually a lot more fulfilling, sustainable, if you will. All right, let's go ahead and move to our MACD. I'm going to take it back to the 1 day, get rid of the three moving averages. We're going to add in this MACD, which sort of switches up the moving average scenario a little bit. And of course, no surprise here on the daily side, the data is so skewed that it really isn't going to hold a whole lot of value. I am going to drop this down to the 1 hour. So it was at the 1 hour and the 15-minute that we saw some significant indication of a possible bull run. And here, back here, that would have been last Wednesday, I believe, the 17th. You can see that there was officially a crossover and a separation where the MACD line had touched or crossed. Really, the cross came back here, but it touched or crossed the signal line, and now it's above the zero line. So that's an indication of a bull trend for sure. Let's drop it down to the 15-minute just to see what's going on at that level too. Interesting, at this 15-minute, we actually have a crossover happening where the signal line is above the MACD line, which would indicate that it's looking to sell off some. So, inconclusive when it comes to the MACD at the 15-minute level, but at the 1 hour level, the MACD is still looking bullish. Let's drop this one more time back to the daily, and I'm going to do one more thing, which is we're going to take in more data this time. I want to take in the full move of the last big trend. The last big trend or big move in this was this drop lower. I'm going to go all the way back from 2017, and I just want to do a Fibonacci retracement just to get a sense of where we are relative to this big old trend right now. So we're going to start there, go all the way down, and I just want to see as I look at this what's going on. So from a retracement standpoint, right, this up move that we saw back in January, it did cross the 50% level, came on back, and right now we are lower. So we've got $10, right around $10 as a 23.6% level there. And you don't see a whole lot of trying to look for any support resistance that's in line with these levels. We really haven't gotten there yet. So I'm going to say that the ultimately this Fibonacci analysis wasn't as valuable as I'd hoped. Let's check it out from this one here, which is another retracement period. Because we did have sort of a stalling out of the market. I'm going to take it from the very tippy top there down to the bottom and just drag it over so I can include all the data that's out there, get a better sense of where it is. So that is that here. Let's see. So at this level, it's interesting. The 23.6 is actually near the tops that we saw back in early June and in around mid or early September. 50% retracement would be closer to this period back in August and September of 2019, and we almost reached a 100% retracement when the stock pushed higher. I bet you there were a lot of people that were counting on that retracement to happen, and the full retracement, and it obviously didn't. But see that kind of move, that kind of strength in one day was just truly amazing. I mean, you go from $2 all the way to nearly $20, 10x in a couple of days. Is just unreal, right? If you've been in the markets much longer than a week, you probably have an idea of how truly amazing that was. But here's why I decided to take a look at this stock, and part of what I think is interesting right now. Hopefully I'm not making you guys nauseous as I move the chart in and out. And as usual, I'm using a trading view chart. These charts I really do like. So look at where this stock is right now, right? I really didn't even have to draw this because the stock price itself essentially has drawn it for me. I'm going to try and get it right on there. So we've seen this level. It mattered back in February a year ago. It almost was reached again in early June. It did end up being touched in September of 20. And then right now we're right here. So this to me looks like significant resistance. We have not crossed higher than this price except for during this sort of flash rally thing. We haven't crossed this price since prior to 2020. So it looks like that is sort of the resistance level. And we already can see that if we get above that price, we might actually get here to $10. If you remember that $10, sorry, I'm going to have to, it's a little too frothy there. What did I do? Okay. And do that. I'm going to pull this line a little bit down. But you can see that this period, this $10 range, $10.25, whatever it might be, has played a significant role. Like it acted as resistance at that next level. So I'm beginning to think that if we can cross this sort of $7.70, we'll just top it off at $8. If we can cross $8, there's a good chance that we're going to pick up another $2. That $2 would represent a 25% return on that stock before it hits the next level of resistance. That may end up being support too. So as interesting, I really didn't think there was going to be a whole lot to this chart just because the movement hasn't really been technical. But when I look at these support and resistance levels, I can't help but see it and just say, that really is kind of interesting. Specifically this $10 level, the $8 level, and we are bumping right against that right now with 770. If we can cross that and stay above it for a day or so, I imagine that is going to end up being a level that becomes support rather than resistance. And we can see the stock sort of push higher, whether it's a grind higher or a rush higher. I think if we can get beyond this current level, if we break this level of resistance, then that level could become support and really help to push the stock a lot higher. So that is it for today's analysis of AMC. Thank you guys so much for watching these videos and leaving comments. I really enjoy making them for you, and it obviously helps my trading as well. I do actually trade. I trade crypto, I trade options, I trade some equities. Occasionally I hop into the futures market too, and technical analysis helps me with all of it. So that's why I like to talk about it so much. So thanks for watching. Hey, if you haven't subscribed, please do subscribe to the channel, and I'm going to keep making these videos, so stay with me, all right? And have a great evening. As usual, happy trading.